and welcome to Hot Issues of the Week, a weekly feature covering some hot topics of the past week in Korea. I'm Lauren Hardy. A three-way meeting between the president and party leaders has not met expectations. In North Korea, the Inter-Korean Industrial Complex is up and running again, and foreign holdings of Korean shares are at their highest in 6 months, highlighting the Buy Korea trend in the stock market. These are the week's hot issues. Stay tuned. For the first time in constitutional history, President Park Geun-hye went over to the National Assembly last Monday for a meeting with ruling and opposition leaders. The three-way meeting ended with no agreement and aggravated the political gridlock. Rival parties now continue to fight outside Parliament. The fruitless meeting took place in high hopes as it came on the heels of the president's return from an overseas tour and amid the prolonged parliamentary boycott by the main opposition Democratic Party. In the talks, the president and ruling Saenuri Party chairman Hwang Woo-yeol and DP chairman Kim Han-kil had held a heated discussion on the National Intelligence Service's alleged meddling in last year's presidential election, among other issues. The opposition chief urged the president to apologize over the spy agency scandal and punish those held accountable. But Park turned it down, saying a president does not apologize for an event that took place under the previous government. The DP's chair also raised allegations of government pressure surrounding the prosecutor general's resignation related to an alleged illegitimate child, and that the Justice Ministry gave orders to inspect Chief Prosecutor Choi Dong-uk. The president said the justice minister did what he had to do when ordering an inspection, and the truth about the allegation should be revealed. Park and Kim also clashed over issues of economic democratization and tax reduction. All said, the president basically rejected all key demands made by the opposition leader. With opinions differing, the meeting continued for a half hour longer than expected and lasted a total of 90 minutes. After the meeting ended, rival camps pointed fingers at each other regarding the talks' failure. The Saenuri Party said the DP is only bent on making unilateral demands for the sake of political strife and has little interest in the economy or public livelihood. Meanwhile, the DP called on the president to take full responsibility for the ruptured talks. Chairman Kim said the three-way meeting was wonderfully wrapped, but there was nothing inside the gift box. Normalizing parliamentary operation now appears to be an even more distant goal. During a Tuesday cabinet meeting, President Park again criticized the DP for refusing to return to Parliament. She said the DP is sacrificing the public for its own party purposes, and if the boycott continues, the party will face public resistance. The Kaesong Industrial Complex began its trial run production last Monday after a 166-day operational stall. On the first day, a total of 821 South Koreans traveled to the north in 8 different groups throughout the day. Many of the vehicles that crossed the border were trucks loaded with raw materials. Only 377 South Koreans returned home, and the rest will remain at the complex to focus on supply of goods and launch of their fall items. A good number of them even worked through the Chuseok holiday. Company officials are in good spirits and happy to work hard to make up for the loss of the past half year. Some North Korean workers also showed up at the complex to help with resuming business. The resumption of the complex was a laborious feat achieved by the two Koreas through 7 rounds of negotiations. During the talks, the two sides formed a joint committee on reopening the complex. It was the joint committee that thereafter determined the details of the resumption, including the timetable. The two Koreas had held multiple committee meetings. Though preparations are underway, a number of electronic and mechanical firms won't be able to start business right away due to the corrosion of their high-precision equipment. The Kaesong Park is expected to advance a step further in terms of operation, passage, customs, and communication, as well as preventing a future shutdown. One of the new changes was observed on the first day in regards to South Koreans going in and out of the complex. South Koreans entered the complex at 11 different times and left the complex at 10 different times, far more frequently than in the past, when entry and departure was fixed. But the two Koreas have yet to agree on a number of remaining concerns, including ways to internationalize the inter-Korean factory zone. As foreign investors continue their Buy Korea trend, the percentage of Korean shares held by foreigners in the domestic securities market has reached a 6-month high. Experts believe this is due to firm fundamentals of the Korean economy gaining investor trust amid crisis reports concerning emerging markets. According to the Financial Supervisory Service and the Korea Financial Investment, as of last Monday, nearly 35% of shares were foreign holdings of the total 1.2 quadrillion won market cap of the domestic securities market. The percentage is the highest since 34.7% was reported in mid-March. The figure remained in the 33% range for much of last month, but exceeded 34% on August 29th and has risen ever since. Just before the Chuseok holiday, the percentage was about to top 35%. Entering September, foreign investors net purchased over 6 trillion won of Korean stocks in the securities market through the 16th. The Buy Korea trend continued for 18 straight trading days from August 23rd to September 17th. On September 12th in particular, total foreign buying surpassed 1 trillion won. As for the tech-heavy Kosdaq market, foreign holdings accounted for 9.57% on Monday, the highest since August 27th. But foreign investors net purchased just a little over 60 billion won in the Kosdaq this month, as more investment was focused on Korean blue-chip shares. It's worthy to note that foreign funds are coming into Korea while a capital run is occurring in other Asian emerging markets amid signals the U.S. will taper off its quantitative easing. The reduction in quantitative easing means market liquidity will decrease and investors could withdraw funds from emerging markets. This can lead to a foreign currency crisis in these countries. With this as a backdrop, capital is bound to move toward safe assets, which would be advanced markets with solid economies. This shift is taking place at the moment as massive foreign funds are exiting countries like India and Indonesia. But South Korea shows a completely different situation as foreign funds are instead flowing in. This means that while Korean fundamentals are strong, the value of Korean firms is underestimated. Korea has been posting a current account surplus for the 18th month through July. Its foreign reserves are also at a record $331 billion as of late August, while its short-term foreign debt has gone down. Foreign net buying of Korean shares is expected to continue for the time being. That's all for Hot Issues this week. Thanks for staying with us and join us again next week for more hot topics making headlines in Korea. I'm Lauren Hardy, signing off.